And welcome back to the Capitol Report. I'm Steve Lance. Cyber Monday today. Spending promising to be strong following record online spending on Black Friday. Doug Flynn, certified financial planner and co-founder of Flynn Capital Zito Management, joins us now. Great to have you back with us. So
Hey,
Black
Steve,
Friday, great. Thanks so much for joining. Black Friday spending hit record levels this year. This despite reports of weaker consumer economic outlooks. With Cyber Monday expected to be strong as well, what do you make of all of this, and why is consumer spending so resilient right now?
Yeah, well, you have a mixed bag, really. Consumer spending, some of the spending has to do with the fact that things cost a little bit more. So even if we just sell the same amount of stuff, but the costs went up, then you're going to have a greater overall spending amount. But there are pockets of people that are spending more and buying more. And those are the people on the higher end of the income scale. And also the baby boomers, they seem to be in a pretty good financial picture. So they're spending. Some of the younger people are not spending as much, and maybe it's because they just can't keep up with the amount of increases of the costs due to how much things have risen, and they're not on as sound a footing overall with their own personal economy. So that's translating in there. But overall, when you take it in its aggregate, you are seeing some huge numbers on Black Friday and also on the digital front. All the stores seemingly have shifted to getting a lot of online sales, mainly at the expense of, year over year in-store sales are not up that much. So it's kind of shifted as has been the case over the last couple of years.
Doug, devil's always in the details. You can torture the data till it speaks. One of my favorite lines. When it comes to the psychological aspect, I mean, could it be that the economy is still in sort of a dicey situation and people are really that passionate about finding deals and they think this is going to be the only time that they'll find one, and that's why they're stocking up or taking advantage? And how important is that collective spending during the holiday season coming from all demographics?
I mean, the average household is definitely spending close to its record high, and even if it's not quite as high as last year, it may still overall surpass in total dollars. But it's pretty close. If it's not the first, it's going to be the second highest. So consumer spending is key, as we talk about a lot. It's 70% of our economy, and so that economy is going to get a boost by all of this consumer spending. And so you could see also some other byproducts of this spending is that a lot of firms are saying that their seasonal employment numbers are good. They're hiring a lot of people, and the employment situation is kind of hung on. It's not as strong as it was, and it's certainly getting a little weaker. But you see these pockets, and overall, you have a lot of this. You have a very mixed bag of good news and mixed in with some slightly bad news, and I think that's why the president wants to get some of that money back into people's pockets through those checks that he wants to put out there, and also just lowering their taxes to try to put some more money in there. And then more importantly than anything else, he wants to get the interest rates lower, because that's really going to translate into the people having more money and helping those people. So that's kind of the mix that you have going on, but it's not all clear by any stretch. You do see these situations certainly around the labor market where even though it's hanging on, the people that do become unemployed are tending to stay longer unemployed than they had. So that's stretching. So that's a little bit of a concern.
So, Doug, you obviously have a unique perspective as a financial advisor. You're tapped in. You're seeing a lot of different scenarios. What's sort of a nugget of financial advice that you could share with our viewers that you think would be important for people to sort of take in?
Yeah, I think there's actually a couple things, especially around this time of year, what I think people should do. And the first thing you should do before you start your holiday spending, if you haven't already, is set a hard spending cap. Like, pick a number that you're not going to go over, and try to stick to that. The next thing you should do is use the rewards. A lot of these companies are throwing rewards at you, but use them intentionally. Like, don't go overboard. A lot of times you end up spending more because of rewards. And so that's something you have to be really careful of. And the one takeaway, I think, more than anything else, you see a lot of these buy now, pay later situations. And those are okay in the short run. But if it stretches out anything longer than 6 months on these buy now, pay later things, people dramatically underestimate their expenses, because those include interest. And so even if you're trying to stick to an overall spending number, if you're not thinking about the total amount and putting it on a buy now, pay later, I always say, well, later is going to come. And if you're not careful, it could be very expensive with that interest. So those are a couple things that I think people should think about when they're doing all their holiday shopping.
A lot of great advice right there. Don't chase the rewards. Doug Flynn.